Hello everyone, this is my second video on amalgamation. After I presume everybody have already watched the previous video where I have explained the theory relating to amalgamation in the nature of purchase, where you pass the closing entries, the opening entries, and I have explained you the few glimpses of balance sheet and already explained you the process. So as stated earlier, I will not repeat any statements because since this is a video recording, you can always repeat the video and watch. So we will follow these steps. Step 1, we calculate purchase consideration. Step 2, discharge of purchase consideration. Discharge of purchase consideration. Step 3, we pass closing entries in the books of transferor companies, because the transferor companies are closing down. Then we pass the opening entries in the books of transferee company. Then we prepare balance sheet, Companies Act format, after amalgamation or after absorption, after taking over, after acquisition, as the case may be. So let's quickly move on to the problem. Now this is the question. Now first, when in examination, you need to read the entire question right from the beginning till the end. So you will be reading the question from the beginning till the end. So here we will be doing amalgamation in the nature of purchase. So you have these liabilities on the left hand side. You have equity share capital. It is insider's liability. You have preference share capital, insider's liability, export profit reserve and investment allowance reserve. Now these two reserves, they have only given it is statutory. So we will transfer it to new company. If we transfer it to new company, we will not treat it as an insider's liability as of now. See, there are two methods wherein we do the closing entries. A few people, transfer it to equity shareholders account, and from there they transfer it to new company. But what we do to make a distinction between amalgamation in the nature of merger and purchase, if it is purchase, we transfer only outside liabilities and statutory reserve to a realization account. If it is amalgamation in the nature of merger, except share capital, we transfer all the liabilities to the realization account. So these two statutory reserve will be transferring it to the new company. So we will treat it as outside liability. Then you have profit and loss account. It is an insider's liability. Then 13% debentures, trade creditors and other current liabilities. All these are external liabilities or outside liabilities. Now all these assets, there are no fictitious assets. All the assets are normal, tangible or intangible assets as the case may be. So these are the different contents of the balance sheet. Now they have given the adjustment for calculating purchase consideration. Now XY Limited is formed to take over X Limited and Y Limited. So this is the case of amalgamation. For the following consideration, they are issuing equity shares to the equity shareholders. They are issuing preference shares to preference shareholders at a premium. So since they are issuing shares to equity shareholders and preference shares to preference shareholders, this problem can be done in both the methods because there is no change in the value of assets. So all assets are taken over, all liabilities are taken over, and then the purchase consideration is discharged in the form of shares. So it can be done in both the methods, but I will explain you amalgamation in the nature of purchase. Alright, so this is for calculating purchase consideration. Now they have only given the mode of payment. I had told you in my previous video how to decide whether it is net payments method or net assets method or lump sum method. If you know the total, it is lump sum. If you know the total, it is lump sum. If you know the mode of payment, how many shares and how many how many equity shares and how many preference shares were given. If you know the mode of payment, then it is net payments method. If you cannot find out, if it is if you don't know the total and you don't know the mode of payment, then it is obviously net assets method. So first you rule out the first two methods. If it is not those two methods, then you will decide it as net assets method. But in this problem, you know how the purchase consideration was discharged. Since you know, it will be regarded as net payments method of calculating purchase consideration. Okay. So we will be calculation of purchase consideration. So this will be net payments method. So the method of purchase consideration is net assets method. So what did XY Limited give? Now, as decided, XY Limited is the transferee company. XY Limited, transferee company. X Limited, transferor company number 1. There are two transferor companies because it is amalgamation. Transferor company 1 and Y is the transferor company 2. Doesn't mean it is a second. Just for numbering sake, I just numbered it as 1 and 2. So XY Limited is formed to take over X Limited and Y Limited for the following consideration. They have issued equity shares and 15% preference shares. So first we write in the form of equity shares. So equity shares for X Limited, how many equity shares they have given? For X Limited, they have issued 4,80,000 equity shares of rupees 10 each. So for X Limited, they have given 48 lakhs. This is in the form of equity shares. This is in the form of equity shares. Next, for Y Limited, how many equity shares they have given? Look here, 3,50,000. 3,50,000 equity shares of rupees 10 each. So 3,50,000 into 10, that comes up to 35 lakhs. Now next, in the form of preference shares for X Limited. Now what have they told? 15% preference shares of rupees 100 each to discharge the preference shareholders at 10% premium. Now they have given 15% preference shares of rupees 100. So if you look at the balance sheet, in balance sheet, preference share capital is 22 lakhs for X, and for Y, the preference share capital is 17 lakhs. So first let us check 22 lakhs. So they have given X Limited preference share capital, they had 22 lakhs plus it is issued at a premium. premium of 10%. So 22 lakhs into 10% will come up to 2.2 lakhs. So if you total, it will come up to 24 lakhs 20,000 to X Limited. Similarly, we will be doing for Y Limited. If you look at the balance sheet of Y Limited, their preference share capital is 17 lakhs plus premium of 10%, 1.7 lakhs. So if you total up, you get 18 lakhs 70,000 to Y Limited. So given in the form of equity shares, 48 lakhs to X, and then 35 lakhs to Y. Preference shares, 24 lakhs 20,000 to X, 18 lakhs 70,000 to Y. So if you total this, the total purchase consideration of X Limited is 48 lakhs plus 24 lakhs 20,000, which comes up to 72 lakhs 20,000, and 35 lakhs plus 18 lakhs 70,000 will come up to 53 lakhs 70,000. So this is the total purchase consideration given by XY Limited to X Limited and Y Limited. XY Limited gave 72 lakhs 20,000 to X Limited as purchase consideration and 53 lakhs 70,000 to Y Limited as purchase consideration. So the next step will be closing entries in the books of X, which is transferor company. So the first entry is, you have to remember the 13 steps which I have explained in the previous video. If you have not seen the video, watch that video and then get back, because without understanding the theory you will not understand the problem. So maximum there will be 13 entries which you have to pass for closing the books of transferor company. Now depending on the information given in the question, depending on the adjustment, you will decide whether that entry will appear or not. And I had already told you that there are some common journal entries which you have to pass when you are closing the books of transferor company. Out of that, the first common entry is transferring all the assets except fictitious assets to realization account. So the entry will be realization account, debit to all the assets account individually. So let's take all the assets belonging to X individually. So first let's take land and building to land and buildings. Amount is 25 lakhs. I will be writing the amount in lakhs with skipping zeros. You be very careful with the zeros, because even you put any extra zero or less zero, your marks with zeros also will vary. So be very careful. So this is land and buildings account. The next asset is plant and machinery to plant and machinery account. Amount is 32.5. Then to furniture and fittings account. Amount is 5,75,000. Then to investments. I'm putting tick simultaneously to make sure that you don't miss out any assets. So to investments account, 7 lakhs. Then to stock amount is 12 lakhs 50,000. Then to debtors account, amount is 9 lakhs. Then to cash at bank, that is to bank account, amount is 7 lakhs 25,000. So the total of all these will come here in the debit column, which is 99 lakhs. So transferring all the assets to realization account, being all the assets transferred except fictitious assets. The next entry is for transferring all the liabilities, external liabilities to realization account, including those liabilities which you transfer to the new company. See, there are two methods, two ways people do while they are doing realization account. Normally reserves, any type of reserve will not be transferred to realization account on an assumption that they are not the liabilities or assets to be realized. But however, to make a proper distinction between amalgamation in the nature of merger and amalgamation in the nature of purchase, we make a distinction. We tell students that you have to transfer all outside liabilities and only statutory reserve if it is amalgamation in the nature of purchase. If it is amalgamation in the nature of merger, except share capital, you will transfer all the liabilities to realization account. So this is the first entry. The second entry is transferring all the liabilities, whichever you are transferring to new company. So this is internal liability, you will not transfer. This is internal liability, you will not transfer. This is internal liability, you will not transfer because it is amalgamation in the nature of purchase we are doing. Now, export profit reserve is required according to Income Tax Act. It is a statutory reserve. Since it is a statutory reserve, we will be transferring it to the new company. So, we will treat it as an outside liability and give treatment as an outside liability. And similarly, our investment allowance reserve, it is not there for X Limited, but when we are doing for Y Limited, you will have to take investment allowance reserve, which is again one more statutory reserve. Statutory reserve is a reserve which is required to be maintained by companies as per statute, as per law. Compulsorily they have to maintain. Now, profit and loss account is a surplus. It is an insider's liability. Then 13% debentures, outside liability. Trade creditors, outside liability. Other current liabilities, outside liability. So which I have written outside liability, we will transfer to realization account. Starting with export profit reserve. Export profit reserve account, debit, amount is 3 lakhs. Then investment allowance reserve, it is not there, but I will write dash. Then 13% debentures account debit. Amount is 5 lakhs. Then trade creditors account debit. Amount is 4,50,000. Then other current liabilities account debit, 2 lakhs. To realization account. To realization account, we take the total of all these three. 3 lakhs plus 5 lakhs plus 4 lakh 50 plus 2 lakhs. It comes up to 14 lakhs 50,000. 14.5. So being outside liabilities transferred. So this is the first entry for transferring assets. This is for outside liabilities. The next entry is for purchase consideration due. Purchase consideration due entry will be XY Limited account debit to realization account. I have already given you the theory as to these journal entries. If you don't know, kindly refer those journal entries. Being purchase consideration due. Now you have to check how much was the purchase consideration in the previous step. The purchase consideration given by XY Limited to X Limited was 72 lakhs 20,000. So 72.20. This is the entry for purchase consideration due. Out of the 72 lakh 20,000, 48 lakhs was paid in the form of equity shares and 24 lakhs 20,000 was paid in the form of preference shares. So we will pass an entry for purchase consideration received. So the next entry will be for purchase consideration received. For purchase consideration received, entry will be received in the form of equity shares and preference shares in this problem. So entry will be equity shares in XY Limited account debit. How many equity shares they had given? They had given equity shares of 48 lakhs. Then 15% preference shares in XY Limited account, debit. How many preference shares were given? 24 lakhs 20,000 to XY Limited account. What is the total PC? 72 lakhs 20,000. This is the total PC. So this is being PC received. Being PC received. So these were the compulsory entries. In this problem, preference share capital is there. So we have to pass an entry for preference share capital due. Now due, there are three: either due at par, due at premium, or due at discount. In this problem, it is due at premium. So we will pass an entry for the due entry at premium. So the due entry at premium will be as follows. The entry will be preference share capital account, which is there in the balance sheet of X Limited. Debit. How much is the preference share capital due? It is due amount is 22 lakhs. Now, 2. How much are you giving them? You are giving them to preference shareholders, to preference shareholders account, you are giving them 24 lakhs 20,000. So 2.2 lakhs was premium, and that premium amount will be transferred to realization account. Realization account, this is the premium amount which is there in the calculation of PC. Premium account debit 2 lakh 20, so that comes up to 24 lakh 20 being preference share capital due at premium. So once you calculate the preference share capital due at premium, now you can close the realization account. When you close the realization account, when you are doing journal, what you need to do? You need to find the total of all the debit columns. You need to find the total of all the credit columns. I'll show you later in the last slide. And then you will find out whether there is a profit or loss on realization. If the debit side is more and credit side is less, there will be a loss. If credit side is more and debit side is less, there will be a profit on realization, which we will be transferring to equity shareholders account. So in this problem, there is a loss on realization account. Since there is a loss on realization, the entry will be as follows. Equity share holders account debit to realization account. So in the realization account, it will come on the credit side. The balancing figure will appear on the credit side. So the loss amount was 14 lakh 50,000. 14 lakh 50,000. So this is loss on realization transferred to equity shareholders account. Loss on realization transferred to equity shareholders account. So if you look at the balance sheet, we have already closed all these. One by one, we are closing all the accounts. We closed preference share capital. We closed export profit reserve. We closed investment allowance reserve. We closed debentures, trade creditors, current liabilities. We closed all these accounts. Now what is remaining? Remaining is equity share capital, general reserve, and then there is a profit and loss account over here. Now these are remaining. Now these we will pass an entry for these things also now. So let's quickly close equity share capital. Let's transfer general reserve, then P&L account to the owners of the company, which is equity shareholders. So let's transfer equity share capital account debit. How much is their amount? Their amount is 50 lakhs. Then general reserve account debit amount is 20 lakhs. Look at the balance sheet. Then profit and loss account debit, amount is 7,50,000. Transfer all these things to owners of the company, which is equity share holders account. You have to take the total. 50 lakhs plus 20 lakhs plus 7,50,000, which is 62 lakhs 50,000. So being equity share capital, reserves and surplus transferred to equity shareholders. So now if you look at the balance sheet, we have closed the entire balance sheet. We have not left one item also. We have transferred it either to realization account or to equity shareholders account, and then we have closed. So once you transfer all these things, since there are no fictitious assets, the next entry will not come. So the next entry will be for the final payment given to preference shareholders. Now to the preference shareholders, preference shareholders account, they are receiving the benefit. So how much are they receiving? They are receiving the purchase consideration due to them. They are receiving 24 lakhs 20,000. They are receiving what? They are receiving preference shares. That took 15% preference shares. So they are receiving 15% preference shares in XY Limited. Amount is 24 lakhs 20,000. This is final payment made to preference shareholders. The last 13th entry will be final payment made to equity shareholders. So payment made to equity shareholders entry will be equity shareholders account debit, and you are giving them equity shares to equity shares in XY Limited. How much are you giving them? You are giving them 48 lakhs. So this is final payment made to equity shareholders. So if you pass all these entries, you have closed the books of X Limited. So whatever entries I have had written in the previous slides, I have just written it so that all the entries are there in one place. So if you want, you can take a screenshot of this and then zoom and then see the amounts. So the first entry was realization account debit 99 lakhs, and then all the assets account. You took the total of all these assets and then 99 lakhs. And then the second entry was transferring all the outside liabilities. Export profit reserve account debit, investment allowance reserve account debit, 13% debentures, creditors, outside liabilities. You take the total of all these and put it over here. 14,50,000. The third entry was for purchase consideration due. The fourth entry was purchase consideration received. The fifth entry was for calculating preference share capital due at premium, because you want this premium amount to be transferred to realization account. Without this amount you cannot close realization account. Then you close the realization account. Now how do you close the realization account? Looking at the journal entry, take the debit and the credit. So first take all the debit. What all realization account debit you have written? See, in the first entry you have written realization account debit. Amount was 99 lakhs. In the second entry you have written realization account credit. Amount was 14 lakhs 50,000. And in the third entry you have written credit 72 lakhs 20,000. This is 72 lakhs 20,000. And in the fourth entry you have not written realization account anywhere, so we will not take it. In the fifth entry you have written realization account debit 2 lakh 20. So debit 2 lakh 20. So now you take the total of the debit, total of the credit. This side the total is less, so you get a loss of 14 lakhs 50,000. So this is how you calculate this loss, that is 14 lakh 50,000. And then you transfer all the share capital, reserves and surplus to equity shareholders account, final payment to preference shareholders account, final payment to equity shareholders account. So these are the closing entries in the books of X. After closing the books of X company, let's now close the books of Y company. As usual, first entry, realization account debit to all assets account. So the entry will be realization account debit to individually you have to take all the assets, but now you will see the balance sheet of Y company. Land and buildings 15,50,000, 15.50. Then to plant and machinery account 17 lakhs. To furniture and fittings account 3,50,000, that is 3.5. Then to investments account amount is 5 lakhs. Then to stock account amount is 9,50,000, 9.50. Then to debtors account amount is 10,30,000, 10.3. Then to cash at bank, that is to bank account amount is 5,20,000. So we have taken all the assets. So all assets of Y is also closed, being assets transferred. So as usual, we will transfer all the outside liabilities and statutory reserve to realization account. So which are the outside liabilities and statutory reserve? Statutory reserve is this export profit reserve, investment allowance reserve, and then 13% debentures outside liability, trade creditors outside liability, other current liabilities outside liability. So let me write this amount. Realization account debit, take the total of all these, it will be 66 lakhs being assets transferred. Next one is export profit reserve. Export profit reserve account debit, amount is of Y, amount is 2 lakhs. Then investment allowance reserve account debit, amount is 1 lakh. Then 13% debentures account debit 3,50,000. 13% debentures account debit, amount is 3,50,000. Then trade creditors 3,50,000. Trade creditors account debit 3,50,000. Then current liabilities account debit. Current liabilities account, other current liabilities account debit, amount is 1,50,000. Transfer all these things to realization account. So you will take the total and put it in the credit column, the total of which comes up to 11,50,000. So this is the second entry. Once you post the second entry, the next entry will be for purchase consideration due. Purchase consideration due entry will be, I will put this in green, will be XY limited account debit. Amount will be the amount of purchase consideration. Y company purchase consideration is 53,70,000 to realization account. Amount is 53,70,000. $53.70 being purchase consideration due. This is purchase consideration due. Once you pass an entry for purchase consideration due, the next entry will be for purchase consideration received. Purchase consideration received in the form of equity shares and in the form of preference shares. Now the next entry will be purchase consideration received in the form of equity shares in XY Limited debit. How many equity shares they've given for Y? 35 lakhs. Then 15% preference shares in XY Limited debit. How many preference shares they have given? They have given 18 lakh 70,000. You will find this in purchase consideration. 2. Who is giving? XY Limited account. Total PC is 53.70. This is being PC received in the form of equity shares and preference shares. Now the next entry will be entry for preference share capital due. So we finished with land and buildings, plant and machinery, all these are over. Liability side we finished with export profit reserve, investment allowance reserve, then 13% debentures, trade creditors and other current liabilities. Now we are closing preference share capital. Now preference share capital is due at premium. So they have given PC discharge preference shareholders at a premium. So the entry will be preference share capital account debit. Capital account debit. You have to check the balance sheet value. How much is the amount due on preference share capital? The amount due is 17 lakhs. Debit 17 lakhs. To how much have they given? To preference shareholders. To preference shareholders, they were given 18 lakh 70,000. They were given 18 lakh 70,000. So the premium amount was 1 lakh 70,000. So the premium amount, what we will do? We will transfer it to realization account on the debit side. If it is discount, it will be realization account will be credited. So realization account debit with the premium amount. Debited with the premium account. So this is being preference share capital due at premium. Once you calculate the preference share capital due at premium, you can close the realization account and find out whether there is a loss or profit on realization or whether the realization account has break even. So in this problem, there is a loss on realization for Y also. So we will transfer that to equity share holders account debit. Loss amount is coming up to 2,50,000. Holders account debit 2,50,000 to realization account. Amount is 2,50,000. So this is the loss on realization transferred to equity share holders account. This is the narration. Please write the narration. Don't give any chance for the valuers to cut your marks. Especially if you are getting out of audit corporate accounts, the valuers may find all reason to find where to cut your marks. So don't give chance for the valuers to cut your marks. So once you find out the profit or loss on realization, the next entry will be for transferring the equity share, the remaining, the equity share capital, reserves and surplus, general reserve and surplus to equity share holders account. So the entry will be equity share capital account debit. How much is the equity share capital? Their amount due is 30 lakhs. Debit. Reserves account, general reserve account debit. Reserve is how much? Reserve is 2,50,000. 2,50,000. Then profit and loss account debit. P&L account balance is 5 lakhs. 5 lakhs. Transfer all these things to equity share holders account. Take the total 32 lakh, 37 lakh, 50,000. 37 lakhs, 50,000. So being equity share capital, reserves and surplus transferred. So once you transfer, final payment, since there are no debit balances or fictitious assets, we will go for final payment to preference shareholders and then final payment to equity shareholders. So final payment for preference shareholders entry will be preference share holders account debit Now how much are you paying them? You are paying them 18,70,000 to, what are you paying? You are paying them 15% preference shares in XY Limited. Amount is 18,70,000. So this is the final payment made to preference shareholders. Then final payment made to equity shareholders entry will be equity shareholders account debit to equity shares in XY Limited. How many equity shares they are given? Equity shareholders are given 35 lakhs. So this is final payment made to equity shareholders. So these are the different entries which will post in the books of Y. If you want, you can skip those videos and directly come to this video wherein I have explained you the entire closing entries is in one single sheet. So the first entry is for realization account debit to all assets account excluding fictitious assets. Then the second entry is outside liabilities and statutory reserve transferred to realization account. This is the first entry. This is the second entry. And the third entry will be for purchase consideration due XY Limited account debit to realization. Fourth entry will be for purchase consideration received. Then the fifth entry will be preference share capital due at premium. Then the sixth entry will be to find out whether there is a profit or loss on realization. So for that, what we will do? We will take whatever, wherever you've written realization account debit, you will take all the amount. You've written only in two places. This is realization account debit 66 lakhs and then realization account debit the premium amount 1,70,000. So these are the only two amounts you have debited with realization account which you have transferred over here, 66 lakhs and 1,70,000. Then the next one is where have you credited the realization account? Here you have credited realization account with 11,50,000. This one, and then you have credited realization account over here with 53,70,000 over here, 53,70,000. So you will total, the debit total is 67,70,000. Credit total is 65,20,000. So there is the loss. The loss is 2,50,000. We transfer it to equity shareholders account. So the entry will be equity shareholders account debit to realization account. So the entry will be equity shareholders account debit to realization account. Then the next one is transferring all the equity share capital, reserves and surplus to equity shareholders account. This is the entry for transferring equity share capital. Then final payment to preference shareholders, final payment to equity shareholders. So if you post all these entries, it means you have closed the balance sheet of Y. Once we close the books of X, once we close the books of Y, next we will open the books of the new company, that is XY Limited, after amalgamation. So what we do, we pass the opening entries in the books of XY. So the first entry will be business purchase. You are purchasing the business. Okay, the entry will be business purchase account debit to, now X company and Y company shareholders, what they do, they appoint people called as liquidators. These liquidators are responsible for closing their company, respective companies. So X company will appoint a person called as liquidator of X company. Y will appoint a liquidator of Y company. So what we do? We purchase the business on behalf of X and Y from the liquidators. So two liquidators of X company. So how much should you pay to liquidators of X company? You should look at the purchase consideration. So if you look at the purchase consideration, the amount is 72 lakhs 20,000. Two liquidators of Y company. How much you have to pay to Y company? 53 lakhs 70,000. So when you total these two, it comes up to 125 lakhs 90,000. It comes up to 1 crore 25 lakhs 90,000. So being business purchased from X and Y. This is the first entry we pass in the books of XY. That is opening entries in the books of XY. The next important. So after purchasing the business from X and Y, the second entry, this is the most important entry where we record all the assets and liabilities. If it is merger, we take up all the assets and liabilities except share capital. But if it is purchase, we take up only assets and outside external liabilities and statutory reserve only. So for that we will be passing an entry. Here it will be an amalgamated entry where you take up the assets of both the companies put together, outside liabilities and statutory reserve of both the companies put together. So that entry you need to post now. So the first one, so all assets account debit to outside liabilities to statutory reserve to business purchase, and then we find out the balancing figure. Since this is amalgamation in the nature of purchase, if you get the balancing figure in the debit column, it will be called as goodwill. If you get the balancing figure in the credit column, it will be called as capital receipt. So let's record the assets one by one. The entry will be land and buildings account debit. So X land and building is 25 lakhs. Y's land and building is 15 lakhs 50,000. Both of it you put together, and when you put it together, it comes up to 40 lakhs 50,000. I'll show you the complete entry later on in the final slide. So the next asset is plant and machinery account. Plant and machinery account debit. Plant and machinery of X is 32 lakh 50 and Y is 17 lakhs. So total comes up to 49 lakhs 50,000. Then furniture and fittings. Debit. X company furniture is 5 lakh 75,000. Y company is 3 lakh 75,000. 3 lakh 50,000, sorry. So total comes up to 9 lakhs 25,000. Then next asset is investments account. X's investment is 7 lakhs and Y's is 5 lakhs. Total comes up to 12 lakhs. Then stock account. X's stock comes to 12 lakh 50,000 and Y's is 9 lakh 50. Total comes up to 22 lakhs. Then debtors account. X's debtors is 9 lakhs and Y's is 10 lakh 30. Total is 19 lakhs 30,000. Then cash at bank, that is bank account. Debit. X's bank balance is 12 lakh 45,000. Sorry, total 12 lakh 45. X is 7 lakh 25,000. Y is 5 lakh 20,000. Total comes up to 12 lakhs 45,000. So you pass all the debit entries, that is all the assets. Once you pass all the assets, you leave 2 line space, you write to the statutory reserves, two important statutory reserves which needs to be maintained post amalgamation. Which are those two statutory reserves? One is the export profit reserve, another one is the investment allowance reserve. So we take two export profit reserve account. Now X export profit reserve is 3 lakhs and Y is 2 lakhs. So total 5 lakhs in the credit column. Then 2 investment allowance reserve. X has no investment allowance reserve, only Y has, that is 1 lakh. So directly I take the total 1 lakh. 2. Now we take all the outside liabilities. Now before taking outside liabilities, to the extent of statutory reserve, listen, this is only in case of amalgamation in the nature of purchase. To the extent of statutory reserve, that is 6 lakhs, we open a new account called as amalgamation adjustment account. So to the extent of statutory reserve, we open an account called as amalgamation adjustment account. So what is the total statutory reserve? It is 6 lakhs. So you open to the extent of 6 lakhs, that is amalgamation adjustment account. So once you open amalgamation adjustment account, to the extent of statutory reserve in the debit side, because reserve is credit balance, you have to transfer it to a new account called as amalgamation adjustment account. So you transfer all the outside liabilities. The first outside liability is 13% debentures. 13% debentures account. X has the 13% debentures of 5 lakhs and Y has 3 lakh 50. So total comes up to 8 lakhs. 8.50. So 8 lakhs 50,000. Okay, 8 lakh 50,000. Then after 13% debentures, we transfer trade creditors. So trade creditors account. X has trade creditors of 4 lakh 50 and Y has trade creditors of 3 lakh 50. Total comes up to 8 lakhs. Then 2 other current liabilities. X has other current liabilities of 2 lakhs and Y has 1 lakh 50. Total comes up to 3 lakh 50,000. 3 lakh 50,000. So then you write to business purchase account. In the previous entry, you had debited business purchase account. The amount was 1,25,90,000. Here you credit it. That is 125.90. Whatever debit you had posted in the previous slide in the first entry, the same amount will come in the credit column, 1,25,90,000. Then later on, the next step, the last step, what we do is we total the debit column, all the debit amounts, and we total all the credit amounts, and we find out the balancing figure. If it tallies, no question of goodwill or capital reserve. If debit is more and credit is less, balancing figure comes here. If credit is more and balancing figure comes here, it is called as goodwill. Now if you check the total of the debit columns, the total of debit columns is coming up to 171. 171, and the total of credit column is coming up to 151.90. The credit total is coming up to 151.90. So if you balance, the balancing figure is coming here in the credit column. So it will be treated as to capital reserve. So this is the balancing figure. So balancing figure is 19,10,000. 19,10,000 is the balancing figure which will be transferred to capital reserve. So this is the second entry. So once the second entry is posted after transferring all the assets and outside liabilities and statutory reserve, we found out that there was a capital reserve of 19,10,000. We post the third entry where the purchase consideration will be discharged in the form of preference shares. Here you should remember the purchase consideration we calculated. So if you remember, the purchase consideration was paid in the form of equity shares, both X and Y put together. X equity share capital and Y equity share capital put together was 83 lakhs in purchase consideration. Please refer. Now preference share capital, we divide the preference shares into two categories. One is preference share capital and another one is transferring the premium amount to securities premium. Now to X Limited, preference share capital comes up to 39 lakhs. Both X and Y Limited put together, preference share capital comes up to 39 lakhs and securities premium comes up to 3.9 lakhs. So if you look at the purchase consideration, the preference shares given to X was 22 lakhs. Plus for Y they had given a preference share capital of 17 lakhs. So this both put together comes up to 39 lakhs. So similarly the premium was 2.2 lakhs plus 1.7 lakhs. The premium was 3.9 lakhs. So we just divide the entire preference share capital into preference share capital and premium, so that we can pass the third entry. So liquidators of X Limited. So how much are we paying to liquidators of X Limited? We are paying 72 lakhs 20,000 to liquidators of X. To liquidators of Y, how much are we paying? We are paying 53 lakhs 70,000. Now how are we paying this? To equity share capital. Equity share capital is how much? Equity share capital is 83 lakhs. So 83 lakhs equity share capital to preference share capital. How much is the preference share capital? Look here to the right side of your screen. Preference share capital is 39 lakhs. And how much are we transferring to securities premium? Securities premium account. So please mention account everywhere. So securities premium is how much? Securities premium is 3.9 lakhs. So if you look at all these two totals in these three, it will come up to the same 1 crore 25 lakhs 90,000. That is the second entry. Now the third entry is, this is the discharge of PC. Now the third entry is just a transfer entry where the old debenture holders will get new debentures. Since the percentage is same, the entry will be same. If the percentage is different, we will change the percentage accordingly. So the last entry will be 13% debentures of both X and Y put together. X debentures is how much? 5 lakh. Y is 3 lakh 50. Total 8 lakh 50. And they are given same debentures. So, two 13% debentures in XY. So they are getting same debentures of 8 lakh 50. So this is just a transfer entry with respect to debentures. So you issue convert the debentures of old company to debentures of a new company. So this is the last opening entry in the books of XY. So if you look at all the entries put together, you can just take a screenshot of this and then you can analyze the situation accordingly. So the first entry was business purchase account debit to liquidators of X and then liquidators of Y. This is with respect to total PC. Then the second entry is transferring all the assets and then all the statutory reserve and outside liabilities in the credit, and then transferring statutory reserve to a new account called as amalgamation adjustment account to the extent of statutory reserve. Then find out the balancing figure. If the balancing figure is in the debit column, it is goodwill, credit column, it is capital reserve. In this problem, it is capital reserve of 19 lakh 10,000. Then the liquidators of X Limited will get 72 lakh 20,000. Liquidators of Y Limited will get 53 lakh 70,000, and then in the form of equity shares and preference shares issued at premium. So transfer the premium amount separately to a new account called as securities premium. So this will be the entry if you transfer it to securities premium. And then the last one is the transfer entry with respect to debentures. So looking at the opening entries, we will be doing the balance sheet. Remember, when you're doing the balance sheet after amalgamation, those things which has both debit entry and credit entry simultaneously will not appear in balance sheet. Only those things which has balancing figure, which means only if it is in the assets or only if it has a credit balance, then it will appear in balance sheet. If it is in debit balance, it will appear as an asset. If it is in the credit, it will appear as a liability. So now say for example, in the first entry we had written business purchase account debit to liquidators of X to liquidators of Y. Now liquidators business purchase account debit is there in the first entry, and in the second entry business purchase is credited, so that will not come in balance sheet. Similarly, liquidators of X and liquidators of Y, in the first entry it is credited and in the third entry it is debited, so it will not appear in balance sheet. So remaining all the entries will appear in the balance sheet. So first let us do share capital. Now share capital is there in the third entry. You have discharge in the form of equity shares, you have discharge in the form of preference shares. Now both of these will appear in balance sheet. So note 1, you will be calculating share capital. Now always remember, in the question if they have given authorized capital or any other capital, you have to mention it clearly in the amalgamated balance sheet. In this problem they have not given any authorized capital. If authorized capital was given, I would have written authorized capital and I will underline it. I will not take it in the total. So directly we move to the third entry. Third entry has equity share capital. Now equity share price, one equity share price is 10 rupees given in the question. So the total amount as per the third entry is 83 lakhs. So it will be 8 lakh 30,000 equity shares of rupees 10 each. So this will be equity share capital. Similarly, preference share capital. Preference share capital will be total amount is 39 lakhs. as per third entry. Total amount. One share price is 100 rupees. So it is going to be 39,000 preference shares of rupees 100 each. So amount is 39 lakhs. So you total 83 lakhs. 83 plus 39 comes up to 122 lakhs. So this is share capital. So the amount of share capital which will be taken in balance sheet is 122 in lakhs. All the amount I have written in lakhs. Now the next one is reserves and surplus. Calculation of reserves and surplus. Same, you will look at the second entry and you will take all the different types of reserves. In the second entry there are investment allowance reserve, export profit reserve, capital reserve, and in the third entry you have securities premium. That is also a type of reserve. So we will transfer all the 4 different types of reserve. So the first one being investment allowance reserve. Investment allowance reserve amount is 1 lakh. Then export profit reserve. Export profit reserve is 5 lakhs. Then you have capital reserve, the balancing figure which you got from the second entry. Capital reserve was 19 lakhs 10,000. 19 lakh 10,000. And then in the third entry you have securities premium, where you issued preference shares at premium. We transfer it to, the premium amount will be transferred to securities premium. See, the amount is 3 lakh 90,000. And the total you get 6 lakhs. Total is 29 lakhs. Total reserves and surplus is 29 lakhs. 29 lakhs. So I will transfer 29 lakhs to the balance sheet. This is 29 lakhs. So 29 lakhs is the reserves and surplus. Then long-term loans we take, normally you should show it in note 3. I will be taking directly. You take debentures. So debentures total you have 8,50,000. 8.50. $8.50 is the total debentures. Then you have current liabilities. We take other current liabilities 3.50. I'm taking directly. You please show in working notes. Then you have trade payables, which is nothing but trade creditors. There is a trade creditors of 8 lakhs. So I presume we have taken all the liabilities. Now if you total the balance sheet, 122 plus 29 lakhs plus 8.5 plus 3.5 plus 8 lakhs, you get 171 total. 1 crore 71 lakhs. So this is your liabilities. Now coming to assets, tangible assets. Tangible assets I will show you in note 3. Note 3. Now check the second opening entry. You have to take all the assets which are tangible, like land and buildings, plant and machinery, furniture and fixtures. So we take all these 3. Land and buildings. Land and buildings you have 40 lakhs 50,000. Land and buildings, and then you have plant and machinery. Plant and machinery is 49 lakhs 50,000. Then you have furniture and fixtures. Furniture and fixtures is 9 lakh 25,000. So these are the tangible assets. So let's take the total. 40.5 plus 49.5 plus 9.25 comes up to 99.25. So I take this total here as tangible assets, 99.25. This is tangible assets. Then investments. Investments you have 12 lakhs. Then inventories, which is nothing but stock, you have 22 lakhs. Then trade receivables, which is nothing but debtors and bills receivable, you have 19 lakhs 30,000. Then you have other assets. We take amalgamation adjustment account. Amalgamation adjustment account. Show it in note 10. Amalgamation adjustment account. You have amalgamation adjustment account of rupees 6 lakhs. Then cash, bank balance, how much you have? You have 12 lakhs 45,000. So when you take all these assets, you should take all the assets and liabilities shown in the opening entries without leaving anything. So 99.25 plus 12 plus 22 plus 22 plus 19.3 plus 6 plus 12.45 comes up to 171. 1 crore 71 lakhs. So this is the balance sheet after amalgamation, where we total both the balances of X and Y according to purchase. Amalgamation in the nature of purchase. I hope you all understood. If you have any doubts, you can always meet me in room number 104. Thank you for listening. All the best. So your share capital we had calculated to be 122, and then your reserves and surplus was 25.10, and then long-term loans we take debentures. You have to show it in the form of working note, but I'm showing directly over here. You will take debentures. The debentures you will find it in the second opening entry. It is 8.50. Then current liabilities, we take other current liabilities, that is 3.50. All these things you have to show in working notes. Then trade creditors will come under trade payables, that is 8 lakhs. 8 lakhs. So when you total the entire liabilities, it comes up to